Let's get more on what's happening in the markets. We're joined by Art Hogan, Chief Market Strategist at B. Riley Wealth. Art, great to see you. Love the Christmas flavored jacket. It's great to have you on the show as ever.
Great to be on the show. Always a pleasure, and thank you so much.
So tell us, what is the feeling about the big tech stocks? A lot of them are still riding high. I know that some wounded animals have fallen behind, Oracle, for example.
Yeah, Oracle's actually up today on the news that it's one of the final partners in the TikTok deal. But I would say in general, we've gotten to a pivot point here in this artificial intelligence revolution such that if you are spending a lot of money on CapEx to build out your large language models, that seems to be okay if it's coming from free cash flow. But the more debt you're laying out to accomplish that, the bigger the questions are about when you will get a return on that invested capital. So when you look at players like Oracle, who one of the largest issuers of debt, or Cloudflare, and the others that are using more debt than they are free cash flow, I think investors are starting to make that differentiation point after 3 years of investing in just about everything that touches AI. And that's likely a healthy place to be. So, with the November drawdowns that we saw on everything related to AI, we're probably creating some bargains in some of the key names that aren't using as much debt or using none whatsoever, like an NVIDIA, who's just the recipient of investment in CapEx and clearly already making money. But I think that in general, we've got to that point in the revolution where we're going to differentiate names, and we've certainly seen that in spades over the course of the last month or so.
Maybe you could pull up a one-year chart for Meta. I find it so interesting. It was riding high not so long ago, but there are ongoing concerns about the massive amount Zuckerberg is spending on AI.
Yeah, well, they shifted away from the metaverse, so I don't know if they need to change their name again. But I will tell you this. What investors are trying to figure out is how they monetize these large investments in a platform that largely is driven by advertising. And while they have plenty of terrific product lines, the massive amount they're putting in to build out their large language model, one of 6 large language models that are competing for that top spot, Meta's come into question as to their ability to monetize that. And clearly that's going to be the question that people continue to ask next year as we go from the phase of development and building to the phase of actually collecting on those revenues that you spent.
It's interesting. Our colleagues in CTV News are running a series on crypto fraud in Canada. And some people get sucked in by ads on Facebook that fake, even our prime minister talking up the merits of investments. The reason I bring it up is it's interesting that Meta seems to dodge a bullet, though. They don't seem to get caught in presentations for allowing these ads to run.
Yeah, I did. Well, we have seen that that particular sector can be fraught with peril, and certainly not for the faint of heart, because, while the incumbent players in crypto, things like Bitcoin and Ethereum that now have spot ETFs, have been around long enough for us to know everything around the edges of that industry, things like coins and tokens and new entrants that promise great returns that never come to bear are the biggest danger, I think. And I think that's why that group is so far out in the speculative paradigm, away from the two incumbents, which is Bitcoin and Ethereum.
What trends have you been seeing in earnings? Anything jumping out for you, Art? Maybe even commentary on how consumers are doing?
Well, I would tell you this. I think that one of the clear surprises in the third quarter earnings season and the increase in estimates for the fourth quarter is that the earnings growth from the other sectors besides just the technology and communication services are growing a pace that is almost as fast, if not faster, than some of the big names in tech. And I think that's been a long time coming. We have 11 sectors in the S&P 500, and all of them are up on a year-to-date basis, with 5 of them doing as well as the S&P 500. Last year, we only had 2. So the market's broadening out. Investors are starting to seek out other sectors that are showing clear earnings growth. One of the places that shows up the most is in some of the small caps. The small caps have outperformed since the month of September, the large cap index. And the earnings profile for the S&P 600 small caps actually looks a bit more attractive than the earnings profile for the S&P 500, which is estimated to grow 12% in 2026. So I think that's been the big surprise. People are starting to notice that we paid a lot of attention to 7 stocks over the course of the last 2 years, and this may be the time we start to pay attention to the other 493.
I'm just looking at the S&P Gold Index. I'm breaking it down even more finely. Apparently, there's 163 of these smaller groups. The S&P 500 Gold Index is the best, a gain of 173% this year.
Yeah, we waited a long time for this breakout in gold. It was a 10-year breakout on a non-inflation adjusted basis, and it was a 38-year breakout in gold in an inflation adjusted basis. And once that happens, once you've been dormant for that long a period of time, you tend to catch new investors, momentum investors that finally notice a technical breakout. But at the very same time, you have ease of use with the GLD ETF. Anybody can own gold, and central banks continue to want to buy gold since the beginning of the Russia-Ukraine invasion. And when the SWIFT system froze up some assets, central banks have been big fans of buying gold. I don't think that's going to stop anytime soon.
I was just looking, the number 2 group was the S&P 500 Heavy Electrical Index, and I was wondering, what stocks are they? There's only one in there, GE Vernova, the maker of gas turbines, and that one's been a double this year.
Yeah, we certainly need a lot of power to run these data centers to build out these large language models, and GE Vernova has done a great job of being the go-to place to do that. The stock's up some 140% on a year-to-date basis. And clearly all of the split-offs at GE have been successful. GE Healthcare has also been a very strong stock this year. So sometimes those split-offs actually work, and in this case, they worked very well.
Thanks very much. I really appreciate it, Art. And if we don't talk to you before the holidays, have a great Christmas and a wonderful 2026.
Thank you so much. The same to you.
Art Hogan, Chief Market Strategist at B. Riley Wealth.